Good morning. I'm John Ellsworth, the founder of Success Strategies Incorporated and the creator of the Success Strategies Advantage. And I want to welcome you to a presentation this morning that I've entitled Unnecessary Roughness. For those of you that are football fans, you'll understand this, but I'd like to talk about a situation where my client walked in to our meeting and he was just absolutely irate. Frankly, I think he was more hurt by the comments, but as you'll recall, the years 2015 to 2018, not only in the dairy industry, but in other ag sectors as well, was pretty tough for profitability. But this client had bounced back. We worked a plan with him, developed a plan, and he had bounced back and was very profitable in both 2019 and 2020. So he was a little bit astonished when he was slapped in the face with this comment about, "You are a problem loan." Now, I was a banker for 8 years, and I can tell you that problem loans are not profitable 2 years in a row, nor do they reduce their accounts payable by to the level of, by $200,000 in that 2 year period. Um, and at the same time, service all their debt, principal and interest payments as agreed. Oh, and did I mention that the loan to value on this was a dairy operation? And did I mention that his loan to value on the herd was now sitting at 60%, very acceptable, and the loan to value on his feed line of credit was 80%. Oh, and did I also mention that he had a really nice, becoming profitable diversification plan in place? The profits were starting to roll in partly from that as well, not just the dairy operation. So if we were playing a football game, for example, in the Super Bowl a few days ago, a flag for unnecessary roughness would have been thrown. Being a loan officer is a tough job because you're really serving two masters. You're serving the needs and requirements of the bank to protect their assets, but you're also trying to fulfill and provide to the borrower, your client, your customer, what they need to succeed in their business. But I have to tell you, folks, it's not that tough a role. I did it successfully, as I mentioned earlier, for 8 years. And former President Teddy Roosevelt had a quote which I think is very appropriate at this point in this conversation. And that was, and I quote, "Complaining about a problem without proposing a solution is called whining." End of quote. The point is, what can you do to avoid these situations of what I would call unnecessary roughness? There are 6 things I think you can do. Number one, you can, on a monthly basis, you can track and report your inventory and your accounts payable. And people think that's a bother. It's kind of, oh man, it's such a hassle to do. But you know what? It's something you not only do for the lender, you do it for yourself because it tells you exactly what your position is month by month. Former Notre Dame football coach had a thought on this. He said he referred to this as positive discipline. And he went on to say that discipline is not something you do to yourself, it's something you do for yourself. And I think this tracking of inventory and payables is a good example of that. Number two, monthly basis. You should also be tracking your cash flow analysis. And you'll recall that numerous times in these presentations over the last several years, I've mentioned that cash flow is particularly noteworthy for this characteristic, and that is if you measure it, you can understand it. You understand it, you can control it. And folks, if you can control it, I guarantee you can improve it. And that's what this business is all about. Any business, that's what it's all about. Point number 3, regular CPA prepared financial statements. I would say at least 2 times a year, at least mid-year and year-end. A lot of people do them quarterly. That's probably even better yet. But I consider the cash flow analysis that we do on a monthly basis kind of like the quizzes that you took throughout the quarter or semester in high school, college. But the CPA prepared financial statements, and I mean this out of full respect for the CPAs, I call that the quarterly or final exam or midterm exam, and then a final exam at the end of the year. Because that verifies what we've watched throughout the year and we've tracked on a monthly basis, allowing us to make good changes to allow us to achieve higher profits, of course, throughout the year. Point number 4, the step number 4 that I think you can do, have positive goals that seek to increase long-term profitabilities. Do they happen overnight? Not necessarily. If you're planting trees or a vineyard or something along that nature, it's going to take 3 to 5 years to get it to the point of being profitable. And your lenders know that, and they'll work with you with an appropriate financing plan for that. Point number 5, have and develop a diversification plan. Why do you want to do that? Because every sector has some downturns, and the diversification plan will help you to survive those sector downturns that happen periodically. And point number 6, the 6th step is just this. Have a plan in place to not only put these things forward, but evaluate your achievements, adjust the course as necessary, and implement these. Implement any change that you need to make. Doing these 6 steps will not necessarily shield you or guarantee you won't be targeted by someone implementing unnecessary roughness, as I alluded to. But I assure you that it will do several things. It will increase you, it'll help you be better prepared for future success and profits, and it'll also provide you with the ability to stave off any negative comments, what I call the unnecessary roughness. I want to thank you for listening today. Again, I'm John Ellsworth, founder of Success Strategies Incorporated and the creator of the Success Strategies Advantage. Thank you very much.